Hello and welcome to today's edition of Business Incorporated. Many thanks for joining us. I am Bolaji Akinwale. Today on the program, the global markets were mixed on final trading day of the week. Australia's ambassador to Nigeria speaks on trade relation. Plus, the African Export-Import Bank secures more than $3 billion to fund its activities. We'll begin with the Asian markets, where the numbers were mixed on Friday as investors actually digested economic data and corporate earnings. The ASX 200 closed down 0.2% at 5,283.8, weighed by declines in its financial subsector, which was down 0.58%, along with its REIT sub-index, which fell 1.09%. Losses were partly offset by strength in the energy sub-index, which gained 1.6%, and the materials index, which was up 1.42%. In Japan, the Nikkei 225 finished up 0.63%, and despite the weaker economic data released, that figure was in the green. Mainland Chinese markets also slid after opening positive. The Shanghai Composite closed down 0.23% at 3,105.08, while the Shenzhen Composite finished down 0.7% at 2,052.01 points. And now to Europe. The markets were lower in early trade as earnings season continues amid heightened expectations that the U.S. Federal Reserve will raise rates in the near term. Let's talk more about the markets as Conrad Busen, DWTV financial correspondent, joins me from the Frankfurt Stock Exchange. Conrad, it's good to have you on the program. Now, the earnings season is still on, with more banks churning out the numbers. Swiss Bank UBS and French Bank BNP Paribas. Anything surprising in the earnings report?
Oh yes, Bolaji. It was a bit of a surprise that UBS, unlike so many other banks this earnings season, didn't manage to beat expectations. On the contrary, the profit of UBS came in to be much smaller than what analysts had anticipated. And behind this is that, unlike other banks, UBS did not manage to come in with higher earnings in its fixed income business, in its trading with bonds. And that's because UBS, after, the Lehman Brothers collapse in 2008 and the financial crisis that followed, enormously cut back its investment banking unions and its trading businesses, with the consequence that during the third quarter it did not profit from a significant increase of the overall volume of bond trading and fixed income business. Other banks, many American banks, Deutsche Bank for example as well, Barclays in London, also BNP Paribas in Paris, they all have significant business in the fixed income department, in the bond trading, and that's why all those banks had managed to come in with better earnings than what analysts had thought, just like BNP Paribas also today. One thing I think is noteworthy, despite despite what I said about UBS, the Swiss bank still stands there much safer, I would say, compared to other banks. If you look at what's called the Tier 1 core capital ratio, that indicates more or less the capital basis of the bank. At UBS, this is more than 14%, while, for example, BNP Paribas' Tier 1 capital ratio is only 11%.
Okay, U.S. home sales report shows an upward trend in the month of September. According to reports, this may be another indicator of a possible rate hike in the U.S. What are investors reacting on this?
There is a very clear and very significant movement on the bond markets that indicates this expectation. Government bonds were sold on a large scale today and also the day before that, which made yield on government bonds increase. You know, the expectation that soon in the United States interest rates will rise makes investors sell bond holdings, keep the money in cash, because they believe that eventually they will be able to find higher yielding bonds because of rising interest rates. This reasoning is behind the sell-off on the bond market, and it caused the average yield on German government bonds to climb from negative territory to positive territory for the first time since the beginning of June.
Now, it's been a very eventful week with earnings and economic data. What's your outlook for the coming week?
Well, first off, let me tell you that we shouldn't expect a decisive, significant direction of, for example, the German share index right behind me during the coming week, upwards or downwards. And this has to do with the American election due on November 8th. People here are convinced that until it's clear who's becoming the new president of the United States and whether or not the outcome of the election will be a clear one, before this, no investor will really decide long-term or decisively. So we will have to brace for a jittery, uncertain trading during the next week. Of course, there will be a lot of talk in terms of earnings reports and also in terms of economic data. We will be getting purchasing managers' indices from China, from the United States. The unemployment rate will be updated here in Germany, also in the United States. Earnings reports will come in from many blue-chip German companies, Lufthansa, for example, BMW, and a few others. So I'm sure there's going to be a lot to talk about next week, also here on Channels TV.
Thank you so much, Conrad Busen, DWTV financial correspondent. And Google parent company Alphabet has beaten expectation, reporting a 20% rise in quarterly revenue, helped by sales of advertising on mobile phones and YouTube. Revenue in the third quarter rose to $22.5 billion from $18.7 billion a year earlier. Net income for the quarter was $5 billion, up from $4 billion a year ago. Alphabet, along with Facebook, dominates the fast-growing mobile advertising market. Google's total ad revenue rose 18.1% to $19.8 billion in the third quarter, accounting for more of its revenues. Google underwent a restructuring drive late last year and created Alphabet as a new parent company, making Google's internet operations one division next to other units.